What bonus depreciation allows you to do is to basically do that kind of standard depreciation deduction and put it on steroids.
You talked about this idea about 100% bonus depreciation. You talked about the qualified small business deduction. What are the provisions around bonus depreciation? Like, explain the bonus depreciation and then what's new.
There's varying levels of bonus depreciation, but what it means is it allows you to take a higher than normal depreciation in a given year. So for rental property, that's good, right? You're reducing your tax liability and your taxable income by depreciation. With this new tax bill, we now have this permanency of 100% bonus depreciation. The property has to be qualified property. So if you buy a building, the actual building itself is not going to qualify for bonus depreciation. A lot of the components are furniture, fixtures. One that we see a lot of people miss on is land improvements, irrigation, parking lots. Those generally qualify for bonus depreciation. So QBI is the qualified business income. And so this was enacted in 2017. In my 20 years of practice, might have been the biggest deduction that really doesn't get a lot of play. And it basically qualifies for any business income other than CPAs, lawyers, accountants, and architects. There are some limits. So it has to be a pass-through business. So like a C Corp does not qualify. Most businesses are pass-through. The net income that passes through. So if your net income is $500,000, 20% of that completely excluded from tax.
What does this mean for the not your average investor from your perspective?
Well, so going into rental property investing, what bonus depreciation allows you to do is to basically do that kind of standard depreciation deduction and put it on steroids. Because, that standard depreciation deduction is typically over 27 and a half years. Now, you can look at certain parts of the house that might break down faster in the eyes of the IRS. And instead of that being over 27 and a half years, you might be able to write all of that off this year. And so what it allows you to do is to supercharge your tax savings. And it's available on rental properties, it's available on some other things as well. But you're starting to see the things that this applies to really start to generate a lot of demand.